Today, we're going to cover a report from Hedge doing a deep dive into the Arizona marketplace as Arizona's medical laws was approved back in 2010. And then in 2020, we got into adult use. So we're going to cover what some of that means, what some of the adult use sales have done, all of that and more coming up.
It's only entertainment.
Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business podcast. Looking at total annual sales in Arizona, it was the seventh largest marketplace that Hedge tracks, at least for the last year. Just under $1.5 billion in total adult use sales. That gave Arizona the ability to kind of surpass some other mature markets like Washington State, Nevada, and Oregon, but they're still behind Massachusetts and Colorado. And a lot of that could be that maybe in Washington, people like me are kind of tired of what's in the stores and they're going elsewhere, either to Portland or the underground market, or there's just more people in Arizona. I'm not really sure what the count is. I'm sure there's several reasons why Arizona is kind of eclipsing existing states. Not really a surprise, but I don't think it's also going to be steady. You'll see some fall off for similar reasons. Too high of prices, inflation, better options elsewhere, many reasons. Breaking that down by month and then unit volume, we could see retail sales and unit by month in Arizona. Looking kind of unique when you compare other markets in new emerging areas. Sales growth, for example, newly open cannabis markets tend to start out really strong and then kind of gradually over the next 2 years level off. But in Arizona, you see a strong growth in the first quarter and then plateau for a lot of 2021 before declining slightly in early 2022. And that makes cannabis sales only 2% greater than in 2021. A lot of that could be because of snowbirds, people moving into Arizona. But during that lockdown or COVID, we did see a lot of people moving into the South and warmer areas. But yeah, not really sure. I am just seeing a significant decrease, or at least it doesn't take as long for prices to decrease on the wholesale level. People are expecting thousands of dollars per pound, and that drops quickly. And it's happening faster and faster. You're seeing it already in New York. Early, FOMO for licenses to get into the market, and then right after that, people like stopped caring. In fact, people just kind of walked away from deals because they realized New York's going to take a long time and it's going to be just as difficult as California or any other market. So I think it's catching up a little bit, even though people aren't really watching the West Coast or the the legacy markets, if you will. They're not really paying attention to what's happened in existing markets and just finding out the hard way. Average item prices decreasing. That's just, like I mentioned, prices coming down to reality. And so nothing new there between average item price and average basket price over the last couple of years, trending downwards, but still significant indicators of that emerging market towards maturity. So decreasing 25% from their all-time high at almost $31 down to $23. Average transaction size dropped 31%. Maybe that's because there's more stores. I don't know if we have same store sales, but it could be just that a store opened up. And so they're going more often, bringing that down. It's price and convenience, right? Price is coming down. And if they open up more stores, it's going to kind of bring that average price down from $78 to $54. So maybe it could have been delivery too, where people were getting delivery and there's a minimum. I've mentioned that many, many times. And so now people are going in and bringing that price down too. That could be it. All in all, it's definitely price compression. That's all natural. That's kind of supply catching up with demand. Looking at what's selling and what's not, flower, getting about 40% of the market is going to be, I think, on trend. So looking at 2022 market share of Arizona compared to other U.S. markets, preference in Arizona is pretty on par with everywhere else. So highest revenue categories in Arizona, consumers are choosing flower, and then edibles, maybe a little bit less often than other U.S. areas. Tinctures and sublinguals are fairly low revenue categories as well. I'm a little surprised vape pens in Arizona aren't a little bit more popular. Maybe it's not available, maybe it's not good, I don't know. But I would think that being conservative in Arizona, people wouldn't want to smell as much with the flower. But to the contrary, it's still 40%. Looking at this next graph about flower pricing kind of coming down, we can see that at the end of 2022, flower in Arizona on the more expensive end in the US, that's $86 per gram. And I mean, that's still below Massachusetts at $1.27. But when you look at the end of 2022, it saw some of the slowest pricing compression. It declined only negative 13%. Michigan and Oregon led the charge. They decreased 28 and 36% respectively. Again, Michigan kind of coming down a lot quicker. Like I mentioned before, we're seeing this speeding up of a race to the bottom. So you don't have like the couple of years that some of these other states had for the prices to come down. They really come down quick. Arizona held a Super Bowl. So when you look at, big events, how does that correlate to sales? So looking at the Super Bowl back in February, sales only saw a moderate lift, 3.5% compared to the average Sunday. So not too much. Didn't really do a whole lot, I guess, for that. Looks like consumers in Colorado had a 5.6%. So they did more than Arizona. Brand consolidation is interesting to look at when we track top 10 of the highest volume brands in the US, and then look at individual markets like Arizona, which is the second most consolidated market of last year. And that's because of a large proportion of sales that are attributed to house brands. When you're vertically integrated, you can grow your own and sell your own. Unlike in Washington, where I'm at, a producer and processor or someone who grows and then manufactures is different than the seller. So they don't have that vertically integrated capability. Whereas in Arizona, they do. And so a lot of this is house brands that they have that control over in that vertically integrated market. So they have some level of production capabilities that they can mess with. And we don't. So that's why you're going to see Washington kind of have that lowest house brand. We don't have any. To the contrary, we have 1,700 different product SKUs, making it one of the most competitive in the marketplace out there. And most of it's not good. So I would expect at least 3/4 of these to fail. And I don't think Washington is an exception. I think the most of them out there have pushed out a lot of the good growers, the legacy growers, and it's just kind of deteriorating from the inside out. So I would expect at least 3/4 of all of the producers and brands to fail, because they don't really produce any good quality unless they're going to be kind of the hop equivalent, and sell the ingredient. So that's my new thing. That's my new kick, saying that most of everything is trash out there. In-house brands aren't really consistent across segments. Flower might be the highest market share, whereas edibles has the lowest market share. That could be because of branding rather than price. Not really sure what people's preferences are on house brands, but I think it's all really basically about price and convenience. Even though I've had some stizzy stuff that wasn't good, I've had cookie stuff that wasn't good, I think it's all about branding really, and getting people loyal and in. People get mesmerized by the look. And I just ran into a bud tender who said that there's also an inverse relationship between how good a nug looks and how bad it smokes. I've said that. I just judged 155 strains for the Leaf Bowl, for the Northwest Leaf magazine, and I think 3 of them were good. And the ones that were super purpley and had a lot of trichomes, crystals, and everything were the harshest smoke. They were nasty. Ran into a bud tender who said the same thing. So it doesn't always correlate to how good it looks, how well it smokes. So that's my experience. Let me know what you think. Wrapping up, we're looking at a nearly 1.4 billion in cannabis sales last year. Arizona's already surpassed several markets in size. And despite some similar trajectory to other markets, looking at the Grand Canyon state of Arizona, standing out in several ways, notably its resistance to several pricing pressures, mature growth plateaus, and then a high degree of brand consolidation. There's an additional market analysis at Headset you might want to check out, or you're just going to have to come back for more.
With that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.
Don't forget to smash that like button on your way out and check out these other videos that we've got.